Hi, this is Phil from the Next Chapter team, and it's that time again. It's time to do an ETF review. Today's review will focus on 40 different ETFs from Invesco. And at the end of the review, we're going to take a look at what the balance would look like if we invested consistently in all four funds over a period of time. But before we jump into the review, please take a moment to like, subscribe, and share. Help the channel grow. Help inspire more people to invest consistently and prepare for their future. Now sit back, relax, and enjoy another ETF review. Jumping into the review, we're going to do a quick recap of what an ETF is and how to buy them. Before we jump into it, let's call out which ETFs we're going to be reviewing. We're going to do the Invesco Buyback Achievers ETF that goes by PKW, then BMVP, which is the Bloomberg MVP Multi-Factor ETF, the Invesco FTS RAFI US 1500 Small Mid ETF, so that's a small mid-cap blend probably, and then the Builders and Constructions ETF that goes by PKB. Quick reminder, what's an ETF? An ETF is a basket of investment securities, usually stocks, bonds, or a mixture of both. And then from there, ETFs trade just like a stock. So that means, number two, the ETF price shares change all day. Finally, number three, ETFs tend to have lower expense ratios and fewer brokerage commissions than other investment securities that are available to you. Now, how do you buy an ETF? Well, first off, it's like a quick four-step process. First, you determine the type of account you're going to buy it in, whether it be an IRA or a general brokerage account. An IRA is an individual retirement account. From there, you open up an account with an investment broker. We'll go over a quick list of those next. Then you decide on how frequently you're going to invest in these ETFs. Weekly, bi-weekly, monthly, etc. But pro tip number 4, set up to be automatic. Automatic transfers and automatic purchases. This automation will help you achieve your long-term goals because you're going to stay automatic and enjoy the highs and lows of the market. All right, investment brokers you can go with. These are just a sampling of companies. You got companies like Fidelity, Webull, M1 Finance, Charles Schwab, E-Trade, TIAA Craft, and Vanguard. These are some of the more known names. Of course, do your own research. Determine who's the best fit for you. Go for low cost. Go for good investment tools so you can understand what you're investing in. And you can get a deep dive on what you're investing in. Finally, for each ETF, it's important we're going to look at the ETF category, fund benchmark, fund summary, expense ratio, top holdings, and then that fund performance. First up, we're doing the Invesco Buyback Achievers ETF. This one's a large cap blend, indexing against the NASDAQ US Buyback Achievers Index. So that focuses on US companies that are working to do a net reduction in shares by doing buybacks of 5% or more of their outstanding shares over a trailing 12 months. This one has an expense ratio of 0.62. So that means for every $10,000, you would have expenses of $62. But let's go one step further. How many companies do you get with this one? 200 companies. And let's take a look at the top 10. You get companies like T-Mobile, Bookings, Johnson & Johnson, Comcast Class A, Lockheed Martin, Deere, Pfizer, HCA Healthcare, McKinsey, and Marriott Class A. Let's see what sectors you have involved there. All right, you've got consumer discretionaries at 21.28. You've got financials at 19.68. Industrials at 17.2. Healthcare at 14.4. And consumer services at 11.3. From there, everything else is under 10%, but you get sectors like energy, materials, information technology, utilities, real estate, and consumer staples. Now let's take a look at that performance. All right, our 1 year would have been 17.4, 3 years 6%, 5 year 12.2, 10 year 10.4. And since inception, if you've been in it since the very beginning of this ETF, you would have had 9.66. Not bad. Now let's move into our next one, Bloomberg MVP Multi-Factor ETF. This is a mid-cap blend. Now this one is tracking against the Bloomberg MVP Index. Now what does the MVP stand for? Momentum, value, volatility, and of course profitability. Now the expense ratio for this one is 0.29. So for every $10,000 you have invested, that would be $29 of expenses annually. Now let's jump into those holdings. This one is 53 different companies such as NetApp, KLA, Walmart, Iron Mountain, Public Services Enterprises, Garmin, McKinsey, and Motorola Solutions. Sectors involved here, you have industrials at 18.9, financials at 13.52, information technology at 11.9, healthcare at 10.85, consumer discretionary at 10.55. From there, everything else is under 10%, And you've got sectors like consumer staples, utilities, real estate, communication services, energy, and materials. Now let's take a look at what the performance would have been. Jumping into the performance. All right, check it out. 1 year, 16.29. 3 year, 4.13. 5 year, 7.48. 10-year, 7.51. And since funded exemption, since the very beginning of this ETF, it would have been 9.03. All right, on to our third fund. We have the Invesco FTSE RAFI US 1500 Small-Mid ETF. So this one has the fund category of small cap blend, because it's probably blended with mid caps. And again, it tracks against the FTSE RAFI US mid to small cap index. Because it's an index, the expense ratio for this one is 0.39. But I'm betting because it's an index, you're going to have a lot of stocks there. All right. And so with a 0.39 expense ratio, what's your cost per year? And for every 10,000 you have invested, it'd be about $39. All right. Well, how many stocks do you get? 1,478 different stocks. All right. And they're going for the weighting here. Our top 10 would be companies like Carvana, Sirius Logic, Brinker, Emergent Biosolutions, Carpenter Technologies, Abercrombie & Fitch, Virtue Financial Class A, Pinterest Class A, and then Crocs. And then let's take a look at the sectors. You've got financials at 19.22, industrials at 17%, consumer discretionary at 14.25, information technology at 11.49, healthcare at 10.15. Then from there, everything else is under 10%. What do you get? Energy, real estate, materials, consumer communication services, consumer staples, and then utilities. All right, now for this one, let's take a look at that performance. 1 year, 12.49, 3 year, 2.03, 5 year, 9.77, 10 year, 7.96, and since fund exception, meaning you've been with this fund or held on to this fund since the very beginning, would have been 9.3. So again, 9.03 if you've been with it since inception. On to our fourth and final fund. This is the Building and Construction ETF. This one is a category of industrial funds. And then from there, it seeks to track against the Dynamic Builders and Construction Index. This one has an expense ratio of 0.62, which means for every $10,000 you have invested, it would be roughly $62 annually to hold on to this fund. Now, what companies do you get? You get 30 holdings. All right, companies such as Home Depot, Tran Technology, Vulcan Materials, Tractor Supply, Martin's Materials, CRH, United States Lime and Minerals, and KB Homes. And now let's take a look at that sector. Building products, number one at 28.7 cents. I love it because it sticks with what they said. They said building index, and what do you have at the very top? 28% in building product. Construction materials, 23.33. Household durables, 18.77. Construction engineering, 10.81. Specialty real estate, 10.04. Retail, specialty retail, 10.04. And finally, our small amounts under 10%. Commercial services and supplies, gas utilities, paper and forest products. All right, now jumping into performance, 1 year, 25.35, 3 year, 11.46, 5 year, 17.46, 10 year, 12.14, and since fund exception, 8.92. Wrapping up this review, what will it look like if we invest in all four funds for at least 5 years? Now we're going to take it to the spreadsheets and see what happens if you invested in this consistently. Okay, so we're going to run through a scenario where a person consistently invests $9,000 per year. So they're doing this outside of an IRA and outside of the employer contributions. So they're doing an investment account. And as a reminder, we've got four funds. The first fund, the Buyback Achiever, 1 year 17.41, 5 year 12.10, 10 year 10.14. Next up, our Bloomberg MVP. That one has 1 year of 16.29, 5 year 7.48, 10 year of 7.51. Next up is our small mid cap ETF blend. So it's a small cap blend. You get a 1 year of 12.49, a 5 year of 9.77, a 10 year of 7.98. And finally, our specialty one. This is our building and construction ETF. That one has a 1 year of 25.35, a 5-year of 17.46, and a 10-year of 12.14. Now, let's see how this fund would have looked if you invested consistently. Again, we go for a long-term perspective, so 1 year is not enough. Let's jump to that 5-year balance. Okay, amazing, 63.8, so 63,800. Again, the balance would be $45,000 in principal, just like the graph is showing you, $45 in contributions, 45,000 or 71%. The remaining 29% would be $18,800, and that would drive up your balance to $63,000. Now let's take a look at that 10-year perspective. Let's see what we get to. Whoa, we pulled it off. Broke that 150 mark. All right, so $9,000 a year for 10 years. Principal, invested cash, $90,000. 59% of the balance. Then your growth would have been 41% or $63,700. So again, 10 years of investing consistently in all 4 funds would have yielded a balance that would have been close to $153,000, $90K in principal, $63,700 in investment growth. Hope you enjoyed the review. Many more to come. See you in the next one.
Hey, thanks for staying to the end. This video is brought to you by the Next Chapter team. If you enjoyed the video, please take a moment to hit that like button, drop a comment, subscribe, share with your friends and family. This will help the channel reach out to more individuals just like you. We offer one-on-one coaching where we work with people and small businesses to determine a clear path to achieving their financial goals. This includes things like budgeting to reduce debts, planning for big purchases, and even learning how to build wealth with the tools that you have readily available to you. So please see our link below to schedule a free 30-minute call with our team to talk through coaching and understanding your current financial situation. Also, check out some of our affiliate links below for our high yield savings account. This is a great place to put your money when you're saving up for those big purchases and your emergency fund. Check out some of our videos right here. And please enjoy and see you in the next video.